Hello, everyone, and welcome to another edition of the Forex Technical Market Update for June 16th. We're already halfway through the month. Seems like the month just started. June 16th, 2015. And what we have in front of us is a daily chart of the Canadian dollar versus the US dollar. And the Canadian dollar right now is in no man's land, really. We had the breakdown out of support channel. This was the channel. The market broke down and it's just lingering above the retracement, the Fibonacci retracement level from this breakout. So the bulls and bears are having a duo at these levels from 126 down to 122, because the two things that could happen, or the two ways to look at this market, is that this could be a retracement from the breakdown, and we're going to probably push further down below this support area near the 120. That's what the bears are seeing, while the bulls are probably looking at this as a Fibonacci retracement, 50% trip Fibonacci retracement off of this swing low from 112 up to 128, and they are thinking, okay, the market will continue to rally. So we're getting conflicting signals here on the Canadian dollar, and you as a trader need to know how to deal with these conflicting signals. Are you going to just stay out of a market like this, or are you going to choose a direction? And me personally, when I see a market set up like this, I would stay out of this particular currency pair until I get a clearer view of what is happening. And if you want to play Canadian dollar strength, it is best to probably do it against the euro currency. This is a chart of the euro versus the Canadian dollar, and you see that this market is in a clear downtrend. So when this market goes down, here, that means the Canadian dollar is strengthening. So this is in a clear downtrend. And if you want to play Canadian dollar strength versus the euro, will be a better way to play this Canadian dollar strength if we see further selling into the 136 level, because that could set us up for a test of this 130 level on the Canadian dollar versus the euro. Okay, taking a look at the euro itself, we're still flirting with this trend line. The market is down on the day. We're still flirting with this trend line, and this market could go anyway. So I'm not going to sit here and say definitely will go down or definitely can go up. It can go either way at this point in time. And as a trader, sometimes you just need to recognize instances where the market can go either way, and don't put your ego into things and say definitely will go this direction. This can go either way. What can happen is that it could break out of this triangle and take out this 115 area and continue to rally, or this small correction from the March bottom could fail and we could continue and break to the downside on the euro. So this market can definitely go either way. Taking a look at the British pound, we're still playing this reverse head and shoulders pattern, and the market is actually up today. Remember, I've been saying over the last couple of sessions that the British pound has been fairly strong, and that is seen today also. So we're going to see if the market can test this 158 level. If the market can test this 158 level, this will be our initial target on a market like this. And we're actually long this market for our portfolio, and we're up about 100 pips or so on this British pound trade. And we're as I said, we're looking for an initial move up to the 158 level in this market. We're still long this British pound, Japanese yen, and for those of you who have been following this for a while now, we call this trade near the 180 level, and we're up to 192.81. So that's definitely over 1,000 pips in this market, this British pound versus the Japanese yen, and there's no evidence that this market is going to turn around just now, and we'll continue to hold this long position as long as the market continues to make new highs, because that's how you make money in these markets, by having large wins plus small losses equal profits, really. But most traders practice large losses, and small wins equal losses. And too often, what is taught out there in the marketplace is this method: large losses and small wins, taking 5 pips, 10 pips profit, while the market would offer you 100, 150, 200, 1,000 pip moves. And if you want to be successful, it's best to move away from this approach. Okay, thank you very much for listening. If you want to have these signals, you remember, if you want to have these signals sent to your trading account automatically, all you have to do is click on the link below to get started, because we're seeing some other moves in the market that in a couple of months could look like this British pound, Japanese yen. And folks who got in early with this move are seeing some good rewards. So click on the link below to get started, and have a good day. Thank you.